Good afternoon, good morning, good evening, everyone. It is 3:27 p.m. Eastern Standard Time on this first day of April 2021. I got the date right. I almost said the 1st of March. April Fool's Day, but I have no April Fool's jokes to play on anybody here. First off, let's take a look here at Cardano and, looking at the monthly chart because we just ended March. And March for Cardano was a down month. I was down almost 10%, 9.42%. It had reached all the way up. The high for the month was at 151.40 compared to February, where we had a high of 154.67. Now, February is a pretty massive month. I mean, this is actually a pretty this is actually not the greatest looking candlestick pattern. This is a tweezer pattern, which is indicative of weakness and usually warns of some selling pressure. And when I look at the current structure here on Cardano, let me get rid of the Ichimoku chart here too. I mean, you can see that one could say that we've completed a third wave in an impulse move with Elliott wave. So if this is our impulse move, 1, and then we have 2, and if this is 3, 4 can go really anywhere between. I mean, we could say that is 4, but it could also move lower back down to 18-ish cents, as long as it doesn't go below 1. I don't think that's going to happen. No, that won't work. That won't happen. Well, I shouldn't say that won't happen. It could happen. But that's the kind of activity we're looking at here. I would not be surprised to see a healthy corrective move. You push it down further south, but at the same time, I mean, if Cardano continues to appreciate and accumulate up here, that's a sign of strength. But this accumulation period could happen over months. I mean, you could see this happen for another 6-7 months, where you have prices maybe drifting back down to $1 or in the high 80s, early 90s, or early 90s, low 90s. That could be a situation you see us in. Also, we could probably see it try to come back down and test the prior all-time high close, which was back at 72 cents basically. So there's a lot of things going on there that point to that being a probability. Volume-wise, the participation in March was not very heavy. I mean, it was, what would we have, 4.57 billion versus almost exactly 50% of the volume that was traded in February was traded in March. Volume in old school stock traders look at volume as kind of a leading indicator, and there's this old thing that's saying volume precedes price. If we start to see several months of the volume dropping, that is a warning sign that you may see things continue to drift lower over a short period of time. It's interesting to note that the price action up here has been fairly heavy at these price levels. Compared to, let's just take the COVID lows to where we are now. And let's get off the logarithmic for a second. Okay. The volume that was traded down here, very, very normal. But look at all the volume that occurred in February. If it'll let me get down there, maybe it won't. But you can see that at 113, there's a lot of volume. It's hard to spot over here. And then again, at 123, there's another good volume. No, it's hard to spot with this. I should be using a fixed volume range. which I should just do that. I think TradingView actually fixed range for volume. There it is. All right, and that should give us a little bit better view. Going down on the weekly. Yeah, so right up here at 115, high volume node, and then all the way down here too. But look at all of the activity with the wicks. Definitely a lot of sellers have shown up above that $1.30 range. But then we do have a lot of support coming in as it's gotten closer to $1. Last week's candlestick, I mean, there's not a lot of activity there. I mean, the open was at 118.66 and the close was at 119.28. So really not even a full penny move there, but the range that was traded was pretty substantial. From the low to the high, that's a 59% move. That's pretty crazy. It's a 56-cent range. And then you look at last week's, that was a 32-cent range. And if everything stays the same here, we'll see a 15-cent range traded here. We are seeing higher highs. We're also seeing a series of lower lows. This right here is I talked about this not very long ago about if the weekly candlestick for Cardano stays where it's at. Rather, if we don't create a high above last week's high or a low below last week's low, if we stay within the entire range of the last week's candle, this will be the second inside bar in a row, which creates a condition candlestick pattern known as a squeeze alert. So, and how we trade that, if it forms, we'll go over that next week. I've discussed it in the past a little bit, but just keep an eye out for this. Look at the volume though too. Okay, it's Thursday. We've got Friday, Saturday, Sunday, and we got about 3.5 days left. So we have like half a week left. And a little under half a week left of trading on the weekly candlestick. And we're like a third, if even, of last week's volume. And here's the other thing. What are we seeing volume do? Volume's continuing to decline. And so prices as well may decline. But low volatility, low participation is when cryptos make a crap ton of moves. So just be on the lookout for that and be careful, be wary. That'll do it for me, folks. From all of us here at Exchange Rates UK TV, thank you for watching. Don't forget to like and subscribe.